lower, 18,130 odd. So this is a flat start. Mihir Vora is our market master today. He's Director and Chief Investment Officer at Max Life Insurance. Mihir, it's a pleasure. Great to have you with us here on the program, on the channel. Thanks very much. So the question, Mihir, simply is, will this time the market make a new high? I mean, third time lucky in that sense. Maybe lucky is the wrong word. But in September, we got to these levels and then the market fell. Back in April, we did something similar. Even actually earlier in January of this year, we got a throw-over kind of price action. The market went up above these levels, but eventually came off sharply. Are conditions right now? I mean, is the mix ripe for the market to do meaningfully better this time? Your sense?
Good morning, Prashant. Yes, definitely the earnings momentum is there, the results are there, and there is a bit of a fundamental tailwind, so to say, as far as the markets are concerned for the domestic economy. With a little bit of support from the global markets and the global situation, we could probably cross the new highs. But as I said, we need support from the global markets. There are a lot of uncertainties out there. Markets have run up quite a bit in the last couple of months. So we do need the tailwind from the global markets. With that, we can definitely make new highs.
Okay, we need the tailwind from global markets. By the way, just a couple of stocks, right? Varun Beverages reported a very strong set of numbers yesterday. That stock is seeing some follow-on buying this morning. It's up an additional 5%. Piramal Pharma, we were referring to that earlier with our guest. That one's looking pretty good. Chola Investments post its numbers is up almost about 3% and Max Health, we had some positive commentary from the management, so Max Health is up almost about 2.5%. Mihir, good morning. So until we get that tailwind from global markets, our own markets have not done too bad. So what are the pockets that you like now? I mean, where do you see the next leg of leadership emerge from?
I think we continue with the domestic theme. We have been bullish on the domestic economy for quite some time. More urban than rural. I think consumption is stronger on the urban pockets. Rural pockets are still to catch up. So a bit of a K-shaped recovery, but we have seen that the markets do represent a fair chunk of the large corporates and the organized sector. So to that extent, maybe the rural weakness is still not reflected in the market, except in some pockets of FMCG, etc. So stick with the the domestic theme that includes financials, industrials, cap goods, EPC, and of course the discretionary segments like not only the services like hotels, etc., but even automobiles and thereabouts. Real estate is one segment where we are seeing some traction, and if hopefully we are nearer to the end of the tightening cycle by the Federal Reserve and the RBI, and if interest rates don't move up much sharply from these levels, then even real estate seems to have a good underlying base demand that should drive the domestic economy.
Okay. Hi, Mihir. Morning. You seem to be liking these domestic themes, and you've been echoing that as well for the last couple of interactions that we have had. But Mihir, I wanted to ask you, the IT space or the IT index, the stocks out there, they had a brilliant 1.5 to 2 years odd. Is banking at that kind of a cusp where the next couple of years will be good for banking stocks, or any other sector that you believe could do what IT did, even do 50-60% of what IT did in the last couple of years?
Yes. So banking, while the banking index is near its all-time highs, in terms of valuations, we are still below pre-pandemic levels. If you look at the price-to-book ratio for the banking sector as a whole, because earnings have caught up. So I think next few quarters, at least 2 quarters, I can see that we are in a kind of a Goldilocks situation where the assets are getting priced much faster. The liabilities, deposit rates are going up, but not to that extent. So we have a period where we are seeing improvement in margins for the banks, and we are seeing that NPAs, for which very aggressive provisions have been done, are not going to creep up at least for the next couple of quarters. So it's a ideal situation where you have credit growth happening, no NPA major issues, margin expansion, and the fact that valuations are still below pre-pandemic levels. So that's one pocket I can clearly see where there is value. Even automobiles, for example, if you look at it on a case-to-case basis, valuations and even demand for that matter is just about now coming back to pre-pandemic levels, a little above pre-pandemic levels. So a lot of catch-up to do as far as the domestic discretionary consumption is concerned. And of course, if we are talking about government continuing to roll out PLI schemes, Atmanirbharta, defense manufacturing, localization, then I think this whole capex and EPC theme should also continue to do well.
Mihir, the local consumption theme, right? you'd put out an interesting graphic on your Twitter handle a few days ago saying how government support has been key in maintaining the consumption levels, right? Especially rural areas, and there was a bar graph. The point is, a lot of it is this support has gone up substantially because of price inflation. Fertilizer subsidy, for example, will be at an all-time high. It perhaps will get revised for what the government needs to pay out from what was budgeted. So this is, in a way, a pass-through, inflation-led, right? How much of this is sustainable in your opinion? Fertilizer is a huge component, so I'm picking that out specifically. Go on.
No, absolutely. So, the kind of support that the government has given to the rural economy is almost, and just at the central government level, I'm not even talking about state government support. Central government support has been almost 3 to 4% of the economy for the last couple of years and likely to be there for the next year too. So, I mean, on one side, while we can say that, yes, consumption has done well and held up, especially in the rural area, has held up because of government support. On the flip side, one could imagine if that support was not there, then what the situation would be. So the fact that the markets and the corporate earnings have held up in the consumer segment and many other segments quite well is because of this huge government support. We should not forget that. So yes, and at the beginning of the episode, I did mention in passing that overall, while consumption is doing okay, it's more the rural which is driving it. The urban more the urban which is driving it. Rural consumption is still kind of coming up, but with a much lesser impact, so to say. So I think the rural economy is still facing the inflation headwinds, and we will continue to need government support on the rural side. Good thing is that tax collections are healthy. You can see the GST numbers. So there is ammunition for the government to keep this going. And I think they will, because inflation is something that hits the poor the most, and the government will continue to support the rural economy. So we should at least see maintenance of consumption in the rural side, if not acceleration.
Okay, but even in rural, right, Mihir, there are some signs of a recovery. I mean, if you look at pockets like tractors, for example, M&M, Escorts reported good set of numbers. These are wholesale numbers, so we don't have the retail trends just yet. Retail trends have still been on the weaker side. But don't you think that this is the time to jump in where there are nascent signs of a recovery in rural?
No, absolutely. Tractors have been doing well for quite some time, and we have been bullish on that. But again, tractors, etc., are not necessarily linked only to agriculture. There's a lot of construction-linked demand also for tractors. So whenever there is Manrega activity happening, whenever there is road building happening, or construction of ponds, etc., and even transportation. Tractors are used for rural transportation in general too. So that's one aspect, and also the richer farmers, the bigger landholders are anyway doing well because of price inflation on the commodity side. So I think even within rural economy, we have to differentiate between the rich, large landowners and the subsistence farmers, which don't really benefit even from food price inflation. So if you look at the larger ticket items like tractors, they are doing well. But if you look at the two-wheelers, etc., they're not doing that well. So they're also probably there is a bit of a K-shape.
Mihir, some of these China plus one themes, they did very well, like the specialty chemical space as well. Do you think they have more legs from here on? Some of them have come off the top, but there's still a big opportunity. And suddenly from China plus one, there's a Europe plus one as well that's playing out. You believe it still has more legs out here? Because valuation-wise, well, they've gone up quite a bit.
No, absolutely. So keeping aside valuations, this structural theme is here to stay. The easy energy, the cheap energy days for Europe are probably gone forever. They have substituted with renewables or something. And we are already seeing some major companies shifting production or planning to shift production out of Europe. Now, whether it comes to India or not, that's the second question. But there is definitely a Europe plus one opportunity happening. So in these chemical companies, I would look at the margins for the last 5 years, not 5 to 6 years, not necessarily the margins for the last couple of years, because last couple of years, there has been a huge distortion for supply chains, raw materials. So it's very difficult to figure out what the core margins are. But if I were to look at the longer term margins and then build a volume case around it, that's the way I would look at it. So if you look at most of the companies, since they've done so well in the last 2 to 3 years, a lot of capacity expansion is happening. So maybe there'll be a point in time where capacities will come up, probably not get utilized, maybe a bit of a margin squeeze because of lack of capacity utilization. But over the long term, I think that should ease out, and we are seeing huge volume growth coming up. So I would really play for volume expansion rather than margin expansion for these companies.
Okay, all right. Well, we leave it at that. Thanks a lot for joining in, Mihir. Have a great day and a week ahead. Thanks for that. Well, for the market, it's absolutely